Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, guys, into the charts we go on this Friday, February 15th, 2013. It is options expiration, and we are getting a little bit of a fireworks display here late in the day. We're just about to hit the 3 p.m. Eastern time frame with 1 hour left in the trading day, and the markets have sold off quite substantially from where they were trading earlier today. And again, so interesting to see this on a Friday for a couple reasons. Number one, volume on Fridays are usually super light. Today, it's unbelievably heavy compared to what we've seen all week. All week long, we saw 70 million average volume. Today at 3, 153 million. We've over 2 times done the volume of each average day over the last 4 or 5 days. So, again, that's pretty spectacular. In addition, prior to a holiday, the markets usually like to close neutral to higher. And so far, that doesn't look like it's going to happen unless we see a big surge back. Now, this is coinciding with a little bit of a cycle date we have, and again, looking for a little bit of a micro pullback in the markets starting next week. It looks like it may have even started early here. We continue to be in the range of the 150 to 152 resistance that I've been telling all of our members about, and we continue to be on the right side of trades, both swing trade longs and swing trade shorts. Couple examples here of some good movement. JP Morgan Chase here, down 51 cents today. Beautiful little sell there. Dish, which I'm short, continues to pay dividends here. Love how it's coming into this low pivot right there. That'll be support. When that gets taken out, it's off to the races to the downside. Other ideas as well that we've been short. DIA continues to get hammered here, down 55 cents as well. So, again, very nice to see the market seeing some weakness. Now, the question is, will it hold until the end of the day? Will the markets close down here, maybe even lower? All right. Now, again, going into the charts of the spiders, let's go back to the SPY because it mirrors the S&P 500. And just to give you guys a quote on the overall markets, we have the S&P down 6, Dow down 50, NASDAQ down about 12 on the day here just after 3 p.m. Markets getting a little bit of a bid up. This could be the beginnings of a bearish pattern. Volume starting to die out just a little bit. So, I mean, that's kind of intriguing to just note as well. But nonetheless, the market's starting to try to recover some of their losses. We'll see if they are able to. Looking at the zoomed out chart here, let's zoom out of the 10 minutes so we can see a couple days back. Notice the double top today. Beautiful little double top. Okay, so here's your pivot high, and here's a pivot high from today. That marked the high of the day. The markets then pulled back, bounced, pulled back off the 200. Great bounce there off the 200. And then again, the 3-bar surge. And look at that 3-bar surge. We always talk about 3-bar surges, how they usually end short-term moves. 1, 2, and 3, and then you've now chopped. So you get the 3-bar surge essentially, and it stalls out. If you look at where the low here was of the day, notice how it mirrors the low from yesterday as well. So very intriguing there on the same note. Couple other things to go over here. Let's take a look at the dollar chart today. The dollar continues to be stronger, up 3 cents. The dollar's had a great move up. It looks right now like it's heading to this area. This is going to be your short-term resistance. Gap fill is right below here, but nonetheless, this is your short-term resistance on the dollar. There is a little bit more upside there. If it breaks through this level, you're going right to the 200 and this double top from back here as well. So kind of an intriguing level to watch on the dollar as it comes up into that point of interest. Gold is getting hammered today, down $2.92 on the GLD. I've been telling you guys probably for about 6 months now that gold will continue to go lower, and I'm going to say it even today. Gold will continue to go lower. Will it have bounces along the way like it did over here? Absolutely. But the fact is, too many retail investors bought into gold. They put it in their 401ks because that's what all the commercials said on CNBC to do and on the radio. Anywhere you were, whether you were in your car listening to the radio or watching CNBC, commercials on these news stations were all about buy gold now, buy this, buy that. The Fed's printing too much money. Anytime that happens, and listen, the Fed is printing too much money. I'm not disputing that. But the fact is, that's a long-term indicator of a result. The Fed printing money is something you got to worry about 5 years down the line, 4 years down the line, not now. And the problem is over the last couple of years, all these retail investors bought gold. Guess what? Whenever the retail investor is fully invested in anything, it will go the opposite way. All right, that's what's scary about this is that it really just shows us again that the retail investor is always going to lose out. No matter what, when everyone is going one way, the markets will go the opposite way. And actually, that was one of the indicators which helped me call the top on gold back here. All right, when you were up in this range, it was no brainer. I mean, every little guy was in. The Bagel Man was talking about how gold was a great hold. That meant the top was in. And look at this nice comeback here. Beautiful pullback. Now, at some point, it will bottom out, and I will be buying it. That time is not now. That is for sure. Let it continue to fall. It's going to continue to collapse. There will be a buying opportunity where I will buy a crap load of gold, physical and in stock form, and I will play it and I will make money on it on that way. Right now, just make money on the downside. All right, SLV, guys, a nice pullback here. And look at where SLV is. SLV is a little bit stronger because the economy is stronger, and silver is obviously an industrial metal as well as a store of safety. But look at this nice little support area right down here, and that's exactly what you're kind of bouncing off of on the SLV. I think short term this may hold and get a small bounce. It should hold and get a small bounce, but eventually it will break through and go lower as well. So maybe a small bounce on gold, I should say on silver early next week. Also, gold actually might early next week have a small bounce, but it will continue lower, folks. Little doubt in my mind in that respect. Taking a look at the USO, oil getting trounced today. Nice little drop on the USO, down 54 cents. And again, we haven't really seen many down days in oil for quite some time here, but we're starting to see what looks like it could be a top. You're back below the 20 MA. I'm going to be watching to see if it confirms. If it confirms, you're going down to this necktie area right here on the USO. That will be significant support. We talked about JP Morgan earlier. This stock continues, in my opinion, to put a short-term top in. I'd like to see it pull back, hit the 20, and eventually close below the 20, then trade down to the 50 MA. That would be my short-term target on the downside. But it's good to see it down nicely today. There's no doubt about that. And again, a couple of these other shorts doing beautifully today. Now, by the way, folks, over the last few weeks, I've made plenty of money on long trades, Rosetta Genomics, Pacific Ethanol, and a few other ones. And now what we want to do is get paid on the other side. So as the markets come in here a little bit today, just let them pay us. We'll take some profits off as they come in, and then we'll switch it around again and go long. I am neither a bull nor a bear, neither should you be. When you get to be one-sided, you will get crowded out of a trade. You will get taken out beautifully, and the institutions will basically steal your money. The point here is be a nimble trader, investor, swing trader. When the charts tell you go long, when the charts tell you go short, read the charts. Learn the PPT strategies. These are proprietary strategies. Learn them and profit for life. Take a look at Apple today. There's a couple tech stocks getting hit a little bit. Apple's down $5 more. Notice here, this is very important. Notice how Apple closed above the 20 MA here. It never confirmed and closed right back below. Not since then have we closed back above the 20. Even with today's gap up, it's back below. This tells me Apple's going lower, guys. You know, those of you that are long Apple may not want to hear that, but I'm just here to tell you what the charts are telling me. And Apple stock will head down to the double bottom and then go to 420 at least. Once it gets to 420, it starts to become intriguing. Might even go a little bit lower, but that is your short-term target on Apple. Amazon getting trounced as well, down $5. The stock sold off after the gap up on earnings, right to the 50 MA, right to this area right here, close to a gap fill. Had a 1 or 2 day bounce. Now it's back down to the downside. I expect Amazon to go lower. Amazon target short term is 249 to 250. I actually think it's eventually going to go down to the 200 MA. That will be your better swing trade long opportunity. All right. Taking a look at a couple other stocks. Chevron getting hammered here today. Beautiful fall on Chevron. Down $1.50. Love to see that action, price action right there. Down $1.50 on Chevron. Exxon is also down, although not quite down as much, but nonetheless down about 66 cents. Look at that nice bearish pattern. See the drop in the sideways consolidation below the 50. That's telling you it's going to the 200. So based on what I'm seeing in the charts, I continue to anticipate a little bit of a pullback next week. I don't think it's going to be a deep pullback, but short-term pullback for sure. And then we do have another big cycle in the not-too-distant future, and that cycle will, again, be a bigger in-play all right? So those of you that are interested, guys, you want to learn cycles, you want to learn proprietary techniques, you want to learn how to profit, you want to get swing trade alerts and calls from us live as we take them, you have to join the Research Center. Again, the Research Center, if you're a swing trader or an investor, get proprietary strategies, learn how to analyze any chart based on this 80 to 90% success rate signal. Okay? Also get swing trade alerts, calls from us live as I take my trades. I'll give them to you on a swing trade basis, and get videos every day, market reports, you name it. It's there for the taking. Join us here at InTheMoneyStocks.com, guys. And again, it's bottom line, profit for life with these strategies. I do, and I'm willing to share it. All our members know this, and they're profiting as well. We're just waiting for the rest of you to get on board. Take care, guys.